The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And let's see where everything is sitting at right now. We have, the S&P is up 1.5 points. We got the NASDAQ up 2. So had some drops, some rallies, gap fills, and everything else. We got the Dow down 10 points right now. We got the Russell up almost 3. Gold is down about 10 points on the day. And copper is basically flat. Silver's down almost 2% on the day right now. Corn down 3.5 points, but that's about 0.5%. Soybeans down 10 points, a little over 0.5%. And then we got oil up a mere 37 cents. Natural gas down 4.75%. Massive move on the natural gas report today. We got euro dollar down 108 pips. We got pound dollar down 49. We have Aussie dollar down 28. We have U.S. yen down 29. U.S. Canadian basically flat down 1. And we got U.S. franc up 57. So sort of showing some dollar mix, some weakness against some pairs and strength against others. Overall, though, the basket dollar index is showing a net positive. And so it's been really interesting seeing the net positive dollar index, and you got the markets flat on the day, and it's just been an interesting dynamic we've been noticing lately in the markets. So if you have any questions, make sure to give me a call. You can reach me right here on the show, 1-877-927-6648. Again, that's 1-877-927-6648. And I'd be happy to take your calls and, answer any questions you got about futures, forex, stocks, binaries, or spreads. Pull up the charts and look at them together with you. All right. So let me see here. Pull up a few more things for you. Let's check out the news we had last night. Last night we had the yen information coming on out and leading to a bit of a drop in the yen so far. But let's just pull up that chart directly and look at it in a little more detail. So right on over here. Flip on in. Let me clean this chart up a little bit. We got a lot of stuff on here. And can get some things off to make it where it's not so crowded. And let's see. Pull that off. Pull that off. And that off. Okay. That gives us a little cleaner chart. And, there's one more thing I can pull off there. We don't need... Thought I already had it off. There we go. Pull that one off. Okay. So looking at this, going in, let's go ahead and pull up the U.S. yen and check it out. And we'll get that paired to see the impact of the reports that came in. And you can see, it was really more of just a copy than anything else. We didn't just get, clear direction. But finally, we got a little bit of a downtrend right there later in the day. And we have seen it move down. It moved down half a deviation, like literally right to half a deviation right there. You can barely see it. It's covered up. But negative 0.5 deviation levels. And it's really chilled out. We've been seeing that across a lot of the different pairs today. And so let's see here. Let's go in and check out the franc. We'll get the U.S. franc right here real quick. And had a massive move on the franc. And you can see how it just flew on up over there. And pretty shocked. That's just a big move on the U.S. franc. But go over here. And you usually just don't get that big of a move on the franc. So pretty cool. And then I'm hopping on over looking at the U.S. CAD right there. We'll get that one. On the U.S. CAD, we had to move down to 0.5, hesitated, back up to settlement, back down to 0.5, reached for the 0.7, didn't quite hit it, back on up to settlement. And then we can wrap on over to the pound dollar. And let's see here. Notice it moved on down to one deviation pulled on back up to half, and basically just bouncing back up between 1 and half, and we expect that one deviation move to be hit over and over and over again. There we go. It makes it a little bit cleaner to see. So about right there, and that's the one deviation mark, and it came right down to it for us. So really clean, nice move there on the pound dollar. And looking on over at the euro dollar. So last night we had the inflation report. The Bank of England governor, he came out and he spoke at 5:30, and basically did not excite people too much about the pound at all in that process. And then the euro had their industrial production report come out. It came in better than expected. The German WPI came in okay, but with everything that we had, the press conference. But for Europe, the main thing was you had the French preliminary non-farm payrolls came out. They came in at expectations. You had the ECB monthly bulletin. The Italian preliminary GDP came in much worse than expected. Came in at negative 0.9%. They thought it'd be negative 0.5%. And then the flash GDP, so of Europe overall, also came in negative at negative 0.6 with an expectation of negative 0.4. And those reports came out at 4 a.m. And you can see that's when the market was already headed down anyway, based on the French preliminary GDP being negative and worse than expected. The German preliminary GDP was negative. So both those reports, they came out right there at around 2 a.m. The German one's the big one. The French one came out at 1:30. It didn't quite have as much of an impact. I mean, it moved in a little bit, but the German one had a big impact because obviously it's a big part of the European economy. So the market moved down right on that, and then hesitated for a little bit. And then I'm over at, 245. Really nothing big on the French market there. But then, like I said, over at 4 o'clock when we got the big move, and that's when we saw the ECB monthly bulletin, the Italian preliminary GDP coming in really bad, and Italy's a big concern right now. And then, like I said, the overall flash GDP. And from that, the market moved on down to 1, 1.5, almost touching 2. But basically just hanging around right now at 1.5 deviations. Probably going to hang out there for the rest of the day. So, maybe see a rally later in the day, but would not be surprised to see it hang out there. So it could be a good time to do a butterfly. So go in and take advantage of some of that time decay. Because you have expiration at 2 and expiration at 3 o'clock. And the other dailies that expire at 3 o'clock. So you have 3 different choices that you can take advantage of on that trade. Now, we'll get on over at unemployment claims. That came out at 8:30 this morning. And unemployment claims came in, basically you could say better than expected. Did help the market rally a little bit. So we can go over, we check out the S&P on that one. And so you can see right here. And then also the unemployment claims come out at 8:30, right about here. Okay. Market decides to go ahead and says that's good news. First it shakes everybody out, as it so often likes to do, and drives everything on up, and then fills in settlement. And it's really just been hanging out right here above the settlement line. Hasn't done a whole lot. Just moving up and down in basically a 2 or 3 point range at the moment. And so sort of watching that one right now to see if we're getting an RSI divergence on the 10 minutes. So it depends upon what all bar types you look at, but there's an RSI divergence right there. And you can even break it down. I know a lot of traders like to look at 5-minute bars. So we can see does the same divergence exist? It does on the 5-minute bars. And then I even use a different type of bar. So on that one, do we get the exact same divergence level when they all line up? And we can see we're getting the, check it out, it's sort of an interesting layout. We usually don't see it this way. But you got a higher high right there, and you got a, not quite getting it on these, so not as clean right here. So would not be hopping in it quite yet, but it is definitely setting up for a definite potential reversal trade. And I really want to see a break below at least the 8-day moving average. And I use a couple other things I want to see pop up before I take that short. Otherwise, you're just asking to get stopped over and over and over again. So, anyways, but that's, very, very helpful. I took a few trades this morning, hopped in on gold. And we had a nice gold setup this morning. And I went short on that. So I'll pull that one up. And I mean, it just, perfect. And I was able to ride that on down there. And moved on down, hit this 0.5 deviation, took off some profits. And talked to some other traders. They stayed in it, and they're still in, which they're doing really, really well. And on the gold trade there we had, earlier this morning, we did have the RSI right here. So that was our first clue to check it out. And let's see here. If I can get it to grip it, not. There we go. So So right there, and then lower high, higher high, right there. And seeing that RSI divergence setting up and forming, starts taking off, went short, and basically was able to start write it down until I saw another potential RSI divergence, and that's what made me a little bit nervous. But good trade, and caught a nice 10-point move on it. So I gotta love that when you can catch 10 points on gold. But big thing using these deviation levels is like, hey, watch out, look to tighten the stops. And we just got some closes below, so you tighten even further. And one of the things I'm teaching on the deviations, I'm always teaching you on the deviations, is look at the 10-minute bars. Look for the bar that closes below a deviation level, okay? And when it does, then what you need to do is you need to move your stop. So like that stop right there, close below that deviation level. And then this stop right here, let's see here. We'll grab this one. This one that closed below the deviation level. Okay, so this bar that closed below this deviation level, that's the bar we're going to move our stop down to. All right, and so we can really ride that spread, ideally, as late as possible into the day, and that gives us room to let our profits run, but helps us tighten our stops. And spreads limit our losses. Now we got to let our profits run. And so using this simple method of once you're directional, then using the deviation, 10-minute bars, even if I don't care if you're trading 15-minute bars, 30-minute bars, 5-minute bars, Renko bars, whatever you're trading. The 10-minute bars I've just seen consistently, and mainly from doing this show and just going through and scrolling through them day after day, that looking for the bar that closes below the deviation is often the best bar to tighten your stop. So if you got short over here, it's like move down, okay, so tighten that stop. So move it from, having the stop here above the high, right there, all right, down to this bar because it closed below, and then we're waiting for a bar to close below. So this one opened and then closed up. So closed below, so we do that one, and then we're waiting on down, but we got another one that closed below. And hey, it may move on down to one, may pull back up, but we've definitely given ourselves plenty of room to hop in on that trade. 1645. Right now we're down at 1635. So about 11 points total from where we're at live price right now to where you could erode the trade down just by doing that simple process. And if you use the spreads, even less risk. Like you could have went in with very, very small risk on the trade. So, and if you haven't checked out the spreads, if you haven't checked out the deviations, then you definitely want to do that. There's a couple steps. Hop on over to Nadex.com and then click on Nadex right here. Once you click on Nadex, then click on our products and then click on demo account. And you can set up a demo account in a few seconds. Just fill in your username. Your username, first name, last name, phone number, and email address. Hit apply for demo. They'll send you an email. You'll be able to sign in right away and get access to it. All right, we'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And going in right now, just looking at what else is going on in the market, checking things out. We're talking about Nadex and getting your demo account set up. Make sure you go ahead and click Create Account. Get a live account, go from start to funded in as little as 5 minutes. It's only $100 to, put it up there. And, click start. And like I said, 5 minutes, put $100 in, live account. You may want to put probably more than that. And, see how it works. But you'll get it going. You'll be able to see. The cool thing is, you don't have to worry about getting stopped out. I was placing a trade. I know another trader was placing a trade on gold. We were both, literally, and this is this morning, okay? Me and this other trader were doing the same trade. He was doing the gold futures contract. I was doing the gold spread contract. And, gold was getting choppy. And so he got nervous, and he got out. And, right up here. Like, we're both getting at the same time. It's just chopping, okay? And I'm in the spread. I don't have to worry about getting stopped out. So I stay in. And, if it goes up on him, he's stopped out. He has to put more money at risk. And that's what happens, right? When you're a trader, you go short, you want to be good about what you're doing, so you put a stop up, okay? And but then it stops you out, and then what do you got to do? Well, I got to put more money at risk, or I got to go the other direction, or I got to sit on my hands, or you don't know what to do. Got to spread up. I can't get stopped out. I have until 1:30 to be right on the trade, and so I'm able to stay in, ride the trade, basically all the way down on the market today, and without all that nervousness of tick by tick by tick, just getting nervous about all this chop, because that's what this messes with you right here. We've all been there, right? You get in, and all of a sudden it ticks up a few, and then it ticks down a few, and then it ticks up a few. It's not going anywhere. It's driving you nuts. This is going on for over an hour of nothingness, okay? Just up and down, up and down. And your heartbeat just, and so you get out. And I'm not saying I don't ever get out of trades. I mean, this morning I went in the Dow. I went long the Dow. I was trying to go for the gap fill. And then came up and got within like a couple points. And then it pulled back and got within a couple points. And then it pulled back. Got within a couple points. I'm like, forget it. I'm just going to take my profit and get out. I could have made, about $10 more on the trade. Whatever. Still made money on the trade. But I could have made about, I was going for just, $20 profit. It wasn't a big profit anyway. So I made 10. I could have made 20 if I would have stayed in. But, I took my profit and enjoyed it and moved on. And it definitely took off. Would have made more money if I stayed in a little bit longer. I wouldn't have stayed in much longer anyway because on gap fills, I get out when the gap fills. But, hence the whole point of the gap fill trade. Because a lot of times it'll hit those gaps, it'll fill, and then it'll flip around immediately and go in the other direction. But anyway, so going up and down right there. And but not nervous, not worried about it. I'm like, hey, this is a solid trade. There's nothing that says this thing's going to start going up. And I stay in, and it's just that's one of the benefits, the psychology advantage, the risk advantage. And both of us are right. You know what? I mean, if you're in the gold futures and this thing's going sideways on you, you're wasting money, you're wasting time. Go find another trade, put your money to use somewhere else. There's nothing wrong with that at all. Now, if you're in a binary, you'd be getting pretty nervous because binaries burning time. And so you'd have a reason to be nervous. But on the spreads, you're really not getting nervous. And, now you may find another better trade. If you do, just close that one out, grab your money, and go put it somewhere else. But, as far as worrying about it spiking up and then coming back down, like maybe going up and testing that 0.5 and then dropping on you, you don't have to worry about that. Because if it does go up and hit the 0.5 real quick and then drops, you're still going to be fine in the spread because your spread itself is the stop. And just to show you, one of the contracts here I was trading, I'll pull up, is the actual chart of the gold spread from this morning. And so we go in, and the market's right around 1646. We're selling right around 1645. Okay, so right here on the spread this morning. And then as it drops down, you can see right here, market's 1635.7. The spread showing right at 1635.5. So I mean, they're very, very close to each other. But our risk was up to 1650, the ceiling. So it'd never go higher than that. So if I actually threw this spread on a chart to show you, the profit potential on the trade, it's actually have to move it down quite a bit because there's a lot of profit potential in it. But go in, and what I do is I throw on a rectangle. So I go out and I go to rectangle and 1650 right over here from where we got in. And then down to 1600, which is bringing us down to a 3 deviation, which we don't expect anyway, so we're not really that worried about that capping our profit. And we actually have until 130 right now to be right. Okay? So the trade just now is about to expire out, all right? And because that's when the floor closes. That's why it expires then. And so I'll review that a little bit more for you when we come back right after this break. Stay right there.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, well, welcome on back here to the Diagnostic Trading Hour. So going over one of the trades we did this morning, we're looking at the gold spread. Went short on that trade, and pretty simple trade. Just went short on it. Like I said, the risk right here, we got in about 16.45. The ceiling was 16.50. That gives us a 50-cent risk on the trade. And so with that trade right there, there's only $50 risk on an actual spread, which is pretty cool. And you're able to go in there and put the trade on. Like I said, $50 risk, and as it moves down, further and further and further, then you can make more and more and more. So if you moved on down, you wrote it down to 16.35, and you made 9.5 points, then obviously that's a very, very large profit on the trade. And the biggest advantage, okay, is right here. So we go in, and we can't lose money above this, and we can't be stopped out. So you go short gold, gold spikes up, you're down your $50 times how many ever contracts, whatever you want, but then it comes back down, you're actually still able to profit on that trade, okay? And without having to put any additional capital at risk, without having to deal with all the psychology games that you'd have to deal with otherwise. So that's why I like the spread so much. That's why I'm always talking about Nadex. You're going to be putting up less margin usually, easily less margin. You're going to be putting up, so you're going to have less risk on the trade as well, and you can't be stopped out on the trade. Now, to trade the spreads, it can get a little complicated. You hop inside the Nadex platform, and you're looking at it. You're trying to figure out what it is you're going to do. And so, like, once you're in here, and then all of a sudden you pull this up, and there's all these different spreads you got to choose from. So you go over to this, and all of a sudden there's, and then they don't refresh. You got to refresh them, by the way, which is never fun. But you go in here and you're like, okay, I want to trade the Dow, and then you get, so we got 3 there, we have 3 there, we have 3 there, we have 3 there, we have 1 there. So that's 3, 6, 9, 12. 13 spreads. If you go both directions on those, you're looking at 26 spreads you got to narrow it down from. And that can just make it difficult, because once you picked your buy or sell, do you really want to spend the next 30 or 40 minutes or 5 or 10 minutes? Let's just say you got it down. I can do it in a few minutes, 3 to 5 minutes myself, and I've been doing it for 2 years every day. So easily you could expect it to take 10 to 30 minutes to have the right one, and that's if you really got it down. And so if we go in and we look at it, then what you can see over here is inside our scanner, to make life a little bit easier for you, okay, then you can go over here and go, you know what, I want to trade the Dow, and I want to go short the Dow, and I don't want to risk more than, by the way, if I don't do all this, what I'm about to do, I get all 26 spreads loaded up, okay? So I'm like, I want to go short the Dow, and so now it's dropped all the buys. All right, and then I don't want to risk more than $100 on the trade. Okay, so now I got rid of all the ones that have more than $100 risk, and I want at least a 1-to-1 risk-reward ratio or better. So now I got rid of the ones that don't have that, and I could say, you know what, I want at least an hour until expiration. So I can do that right there, and then now it gets rid of the ones that don't have at least an hour until expiration. So now I went from 26 possibilities down to 3 possibilities. And then I can compare them and see which ones are better for me. And I'll look at times. Okay, obviously my time's okay because I chose that up here, so I can just sort of skip that column. And now I can go over here and I look at break-even distance before I look at risk. Because, see, $5 risk, that's great. But it has to move 43 points before it's break-even. Well, there's a reason for that, okay? So it's where the floor and the ceiling are on the trade. The ceiling's at 13.19. So you can't make any money until you're inside that spread. Where, see, that says out of the money, so it means that it's basically above the ceiling. So we're telling you that right there. But so that's really, even though that's there, that's not really the trade I want. So now I have these 2 trade possibilities, okay? And I can even click them and they'll show up actually on the chart. I don't know where that shows up in the den, but they'll show up on the chart for me, and it shows me the 2 different trades. You can see one of them makes a lot more money than the other, which is cool, but one of them risks a lot more than the other. So this one's going to risk $64. It's only 2 points away from break even, which is awesome. It means 2 ticks down on the Dow, we're at break even on the trade. Meaning that if the Dow didn't move at all, it only moved down now 1 point, then I'd get all my risk money back. That's what that break even means. It means how far does it have to move for me to get my money back? Okay. Now on the flip side, what is my actual risk? My risk on this was $64. That one has to move 7 ticks. This one has to move, 19 ticks. What's my reward? $77. Over here, what is my reward? $332. Okay? So I can make more money on this one, and I can look at reward risk ratio. The question is, do I want to risk $60 or do I only want to risk 20? And because if you're going to do 3 of these, you'd be better off doing, 1 of these because you still have more profit potential on the trade. So you got to basically choose between those 2. The biggest deciding factor may be really simple for you. This one has 155 minutes till expiration. This one only has 80 minutes. So why is there such a different risk scenario? Well, part of it is because look at the ceiling and the floor. They're different, 13.850 to 13.950. This is only 100 ticks wide. This one's 13.6 to 14. So it's 400 ticks wide. That's why there's more risk because the ceiling is higher. The ceiling's right up here at 14,000, okay? Whereas this one has a ceiling at 13.950. So its ceiling is just above where the market's at right now. Therefore, it has lower risk. But it also is a smaller spread. It's not as wide because it's only been trading for 2 hours from 1 to 3 o'clock. And so it's going to go right to here, and then it's going to stop making money. If you think the market's not going to go below 13,850, then that's a great trade for you. If you think it could go below 13,850, if you have a target below 13,850, then you may want the wider one. And then the other question is, do you think it's going to do it by 3 o'clock, or do you think it might take till the end of the day? This one only gives you about an hour and 20 minutes. This one gives you, over 2 hours, 2.5 hours basically until expiration. So how far do I think it's going to move? and how long do I think it's going to get there? Would help me decide between the two. And, if in doubt, either choose lower risk or choose longer time. So those are really the two things you're looking at. Now, if they come out equal, and we actually saw this morning on a couple of trades we're looking at, if they come out equal risk and equal time at expiration and equal distance to break even, choose the one that can make more money. And, it's just sort of one of those obvious things. You always want to choose the one that has more profit potential if all other things are equal. All right? So, but those are some things that you can look at that you can take advantage of and, do right there. So, but it makes it very helpful. And then, of course, to know, when you're looking at break-even distance, part of it's look at the deviations. Look at where the market's at right now. And so we post these deviations every night at 7:15, and it's basically how far does the market expect the market to move. We're expecting it to move at least down to 13,906. Okay, what was that spread we were looking at? Let's go back and look at it. It went down to 13, let's see, here it is, 13,850. So that does bring us down to at least the half deviation mark. I like that. And below it a little bit too. So there's an advantage to that one, so that's good. That's within my expectation. What about lower than that? Well, 13.85 actually brings me all the way down to one deviation. I don't expect the market to go lower than one deviation today. So if I have no expectation that the market's going to drop more than a deviation, then I have no reason to choose a spread that's going to make me risk more, okay, to target that price level. So since the risk is equal, if the risk was equal, then of course, I'd go with the one that has more profit potential. But if there's more risk on one, and I don't expect it to go further than that, then that may be my deciding factor. So you got to play with it a little bit and figure it out. But at the end of the day, you're just looking at how far does it have to move, how much money am I risking, how much could I make, and what's my time to expiration. And don't just look at, and this is I think one of the things that sort of trips people up, don't look at just the maximum reward. Look at your expected reward. Like, I expect it to drop down to, say, if it was to drop down an entire deviation, okay, so let's just say that's the most we expect it to move, that's 13,850, okay? So since that's my expectation of movement, then really I'm looking at, on this one, a $64 risk for about a $77 reward when it gets down to 13.50. This was a $19 risk for a $77 reward. So all things being equal, that might be my better trade. And the only downside of this trade is it's going to expire at 3 versus this one expires at 4:15. So now that doesn't mean I can't put another trade on. Here in 17 minutes there'll be another one come up, and here in an hour and 15 minutes there'll be another one come up. So there'll be one that expires. Actually, there'll be one more that comes up. Sorry, one more, because there'll be a 2 to 4. So I could wait till then, or I could put this one on now, and then at 2 o'clock I can see if there's another one I like even better. Make sure everything lines up on your charts, that you have the proper setup for the trade. But we went from 26 to 2. Imagine trying to do everything we were just talking about on 26 different spreads. The trade would be over before you ever figured it out. So that's the whole point, is to get it simple and quick and easy on the trades that you're doing. And right now, I'm not even. And the other thing is, you got to wait for that setup. But by having this, I'm like, hey, do I have a divergence yet? I have some divergences setting up. Okay, that could look good. And the Dow is starting to push down. So if I go over here and go, okay, well, we got a divergence right here. We got a divergence right here. Okay. So that was moving down. That's moving up. We're starting to get moved down, starting to close down. So that's when I'm going to start looking for that trade setup to get me in and go short. And it'll work out pretty well. So if you're in that right now, you'd be up a decent little penny if you would have got in it right as that divergence happened and it closed below the 8-day moving average and everything else with it. So hopefully y'all picked up a few tips on there. And like I said, if you have more questions about it, just let me know. I'd be happy to hear from you. Email help desk. If you're a member, by the way, you can go in here to the help desk. You can ask direct questions on me, and I respond to those pretty much every single day. And so if you put it in there, I'll definitely get back to you within 24 hours or less. And let's see here. Sometimes the same day. So I hop on there to knock them all out. And you'll also get access to tutorials. And all this, you get access to this for free. So 2-week trial for free. Check it out. See what you think. And biggest thing, if you're a futures trader or forex trader or an ETF trader, a spread trader, binary trader, You're going to love these deviations. They're incredibly helpful. And we will be releasing stock ones, hopefully in the next 90 days, on 3,000 stock ETFs and indexes on the American Stock Exchange, the Nasdaq, and the New York Stock Exchange that are optionable and that have a price value of $5 or more. So that'll be coming very soon. So we'll just keep adding to it and making the service better and better. All right, so let's go ahead and check out the fundamentals on the day. What else we got going on? We talked about unemployment claims, retail sales coming out of New Zealand tonight. No big deal. Don't expect any major movements on that. And let's see here what else we have that we could potentially use. And tonight, nothing really on the docket that I'm seeing that's just major. That you can use to trade. Let's see here. What about tomorrow morning, early morning? We have G20 meetings going on. That's going to cause some volatility. Okay, we're going to have retail sales, pound dollar retail sales. So you can go over there and take advantage of those. And again, that's at 4:30 a.m. So if you're an early morning trader and you want to take advantage of the pound dollar retail sales, or maybe that's not too early, just depending upon where you live. But look at that one right there. And let's see, preliminary University of Michigan Consumer Sentiment Report. We'll have that at 9:55 here in the U.S. Those are really our only two major announcements. We do have quite a bit of USD Canadian. We have one Canadian and like a whole bunch of USD announcements, medium impact, like Empire State Manufacturing Index, the month-over-month manufacturing sales in Canada, capacity utilization rate, the TIC long-term purchases, industrial production. All that stuff's happening in the morning, so that could make for a good USD Canadian trade. So like a strangle trade or a straddle trade on the spreads or a strangle trade on the binaries. So either one of those definitely has possibilities. And then mortgage delinquencies are going to start being released tomorrow, 15th, 16th, 17th, 18th, and 19th out of the U.S. Let's see here. China is going to open back up tomorrow. So they're no longer on holiday, effective because tomorrow is basically their Saturday. And then we'll have day 1, day 2 of the G20 meetings. So watch out for any weird news that comes out of that, out of some politicians or financial minister's mouth. And don't forget, this Monday we have the holiday. So we'll be on for President's Day. Again, Monday is President's Day. And U.S. banks will be closed. So just be aware of that. So a lot of things are closed on Monday. And I myself will be out in New York City and speaking at the Traders Expo. So if you're going to be in New York City, come out and say hi. Would love to hear from you. Love to see you. And let's see here. I'll show you. This is the expo right here, New York City Traders Expo. I'll be speaking out at that on Monday. And then I think right here, I'm going to be speaking on behalf of Nadex. And I'm speaking at 11 to 12 o'clock, February 18th. So Monday, 11 a.m. to 12 p.m., a new, better way to trade. So I'll be talking about, of course, binaries and spreads, and be happy to answer any questions you have at all. So just make sure to let me know. All right, we all have a great day. Stay right there. We're going to wrap up with some deviations before we roll into the next show. We'll be right back after this break.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, so checking out the markets right now. This morning we have basically the Russell just staying in between a deviation range. It's not been doing much of anything lately. And so it's been crazy. I'm going to have to go in and add some 0.25 deviations the way these markets have been moving. We did get a nice move on the Dow, 0.5, 0.7, back on up to settlement, pulling back from that level right now. And but nice, perfect bounces off the deviations on the Dow, so it's cooperating rather well. And looking over at the NASDAQ, moved on down to 0.5, back on up to settlement. So we got a nice move on that one. Looking on over at the S&P, we can see it moved on down again to 0.5, back up to settlement, just hanging out right there, right around the settlement level. And then hopping on in, and let's check out some metals. Going over here to gold. And gold, as we talked about earlier, moved on down. It's 0.7. And the gold market is now closed in the pit. Globex is still trading. And looking on over to silver. We can see silver right here move down to a perfect 1.5 deviation before stopping, but I mean it literally is just settlement 0.5, 0.7, 1, 1.5, stop, pulled on back, and so yeah, I'm not gonna break out into an NC Hammer song or anything like that with the stop. But we go on over here to settlement almost 0.5s up and down, and that will go fuel you up. And then let's see here, we got the silver one. Let's check out some corn. And corn moving on down to 0.5, 0.7, stopping perfectly before doing a pullback. So easily would have helped you capture that profit. And then drop it on down to soybeans. Look at that. I mean, it just doesn't get any prettier, right? Perfect 1 deviation move. And before it pulls on back up. So just some sweet moves across the board. And let's see what else we can find. Let's check out oil. And oil right there, we had to move up almost to 0.5. I mean, it just worked on it. Could not quite pull it off. And we'll see here. It's going over to natural gas. So natural gas, big move today, okay, on that report. And let me pull that up real quick. We'll go into that before the show wraps up here. But natural gas inventories, come on. There we go. Natural gas inventory reports got released. Came in at negative 157 billion. And a lot of people go, wait a minute, well, that was worse than the expectation. The expectation was negative 166, you know. Yeah, but natural gas is crazy, okay? So that's why I like to strangle it if I'm going to do anything with it. And so you could have went in and strangled it easily on a 1 deviation move. And would have been a beautiful trade, to say the least. And kept going down and then down further. And but I mean, yeah, I mean, inventories are down, prices down. Doesn't make any sense. And that's one thing you want to get. The storage fell by 157 billion cubic feet of British thermal units, or whatever they call it. And you know, so pretty crazy. But the market, despite all that, has fallen on down with it. And, you know, there's a lot more. We can go into the report in more detail and explain why that happened and how it all comes together. But at the end of the day, who cares? You follow the charts. And since you don't know what direction things are going to go on news reports, that's why either strangle them or spread them. So, because it's going to go somewhere. That's all I know. And so I'll take advantage of that. All right, well, let's see a couple other last markets. We got our ags, we got our metals, we got our commodities, we got our FX. We covered all the markets today. So we went through quite a bit. Hope you picked up a few new things, some new ideas to keep you learning. And I will see you tomorrow morning on the Bull Bear Binary Hour at 9 a.m. And then again right back here at 1 o'clock on the Diagnostic Trading Hour. Stay tuned. We have another great show coming up for you right after this.